Morning traders, welcome to the Traders Lab. I'm your host Tom B. Hope you're all doing okay today. This stream's about integrating Bookmap order flow tools with auction market theory using a volume profile as a chassis for overlaying structured trades in the intraday developing time frame. This is about the business of trading. The Trader Lab's a community of like-minded traders that come together to leverage their collective experience. The idea of Trader Lab is to help traders understand how the market works, why it does what it does, how at times to get in alignment with it with trades that are vetted and structured. Also, the business of trading is very different than most of us imagine it to be, and based on what our imagine or fantasy is, we're going to try to adapt and mold trading to fit our fantasy. However, the business of trading is unlike anything you've ever done before. So all you can do is try to make it familiar by pressing it or compressing it into your comfort. The thing about trading is it's an environment that's 100% random 100% of the time. We cannot be comfortable with uncertainty. So the way to manage our emotional stimulus, our fight and flight, and all the other things you experience every day when you attempt to trade, is to change our relationship to risk and to understand that we have to change our behavior in an environment of 100% uncertainty. It's the uncertainty that gets us. So if we understand uncertainty, then we got to change how we relate to it and how we relate to the trading business. That's really what we're trying to do in Trader Lab. And again, Trader Lab is about the business. If you're interested in the business of trading, you might find Trader Lab a different experience for you. So again, welcome to Trader Lab. Let's take care of business. We have a lot to talk about today. And I'm going to explain to you the kind of how we got to where we are today, and why, at least for me, and it's very important you understand, what I do is not what you do. There's no replication and, for example, do what some other trader does, because you're going to find your flow, your time frame. And what is really complex, I think, for traders is this idea, and we're all the same, by the way, so we all start out this way. Replicate, duplicate, imitate. Doesn't work. More, what it is really is more understand. Understand, learn, interpret, and then adjust and modify to your risk reward parameters, your psychology, and the rest of it. And that is a process of development. So this is where I focus in Trader Lab, the reality of trading. I've been trading going on 47 years, and I can tell you, both professionally and otherwise, and I can share with you that I've trained a lot of traders over the years, sat on trading desks, ran desks, and the rest of it. And over time, I've observed common behaviors, common obstacles. And the reason I agreed when Bookmap asked me to stream, and I created the Trader Lab to help traders not lose as much time as necessary to keep repeating processes that don't work. Now, of course, like everything, general disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this isn't a trade calling room. If we get into real time, we'll talk. Let's talk, speaking of that, about the higher time frame or intermediate time frame. This is the all-time high. Now, here's what's important. Now, I review this every day in the stream. Go back and look at previous streams. Everything builds on top of itself, right? Let's look. This is a key level that we leaned on for a bullish scenario. And the reason is, this is a high volume retail price in an intermediate time frame. The market or auction market theory is shopping. Basically, what's too high, what's too low, what's happening. And it does this, and it rotates over itself. And it does this in all time frames. And it's very important you think of the market as an integrated vertical integration of time. And time, so you understand, is not the clock as much as it's the rotations. What is the time it takes for each side to come into the market? That creates the range of the rotations. So it's not 5 minutes, 15 minutes, or whatever. I mean, you can use whatever. It's more the rotation. So when I'm looking at this, I am looking at too low and then the rotation to what's too high. And if I come back to what this high volume is too low, think of a store, and it's on sale, previous price, I can leave it after I test it and go back to what was too high up here, too high up here. You see? So, and then if I come down to the other side, I have support here. By the way, look at the retail price. Same as this. Too low. Where do I go? Back up. New all-time high. Going to the moon, Alice. What happens here? This is the new retail price. This is too high. If I can't get above here and I come under here, then where might I go? Back to what was too low. Back to what was too high. Too high. We're out of here. Where was too low? Well, what's under here? Stops. If I get under this here, that was too low. Sell stops. Where's my next location? It's here. Too low. Back up again. To where? Too high. Back down again. To where? Too low. Is everybody following so far? It's very important. This is not complicated, but it is random. Is everybody with me so far? How are we doing in YouTube? Thanks, Stephen. Everybody conscious in YouTube? I keep hearing those heads hitting the keyboards. Thanks, Greg. Thanks, everybody. Okay, let's go. By the way, if you're visiting in YouTube, please give a like. So let's come back to an important level, this level here. Now, this for me was like the, we get under here, where's the fallout shelter? And on this day, we came under, this is like going to zero, right? And what happened on this day? We came back above here. Once we came back above here, for me, and I'm only talking about my plan, where was the last? Look at the similarity. You see this here? Too low. But once I break out, if I come back in, then what was too high? This. So look at this. Outside edge, get below this, go into zero, come back above it. Where was the last place? It was too high. It was here. Now I'm in multiple time frames. In a intermediate time frame, this is the retail price. If it's too high, I come back. If it's too low, I come back. That's called balance. If I come back to balance or high volume and it's too high, I can sell this, which is what we did over here. Then what do I have? Let's look at what I have. I have longs in here and I got longs trapped. This is called fuel. You need to understand market mechanics. You always have to think from both sides in this business. Not, gee, it's going up. Yeah, it goes up and down. Fine. But we need to understand market mechanics so we can take advantage of it. So let's look. Now I have buyers in here and I have buyers here. Now I've got my longs. If I can't get above here, and by the way, the ETH high on this day was here, then I can go down on the longs that have sell stops under here. And we come down, we take this low out here on this day, and then we come inside, short covering. So what do I know now? I've got shorts in here, I've got shorts in here. Market opens, does the Acapulco cliff dive, and as far as I know over here, going to zero. But where is potential support? Here, outside edge. I can't cover all of this. This is auction market theory using volume profile. You can learn this in Trader Lab. There's a library of webinars, a document section, and of course the Trader Lab community, and we're all in this together to leverage our collective experience. Data mining, research, screenshots, leverage. You bring your experience. And by the way, your experience, my experience, it's all the same. It's just time. My time is 47 years. Your time, probably less. But we all do the same things. The difference is, I've already walked in your shoes. Maybe I can save you some time. Doesn't mean you'll ever be a successful trader because you're going to find that this is the most difficult thing you've ever tried to do. So what happened over here? I got excess. outside edge. No way to know, by the way. Could have just as well gone to zero, When I come back above here, and especially here, then it's the squeezeteria. So I got my shorts in here. Let's go one more day. Let's watch. So what happened yesterday? Well, this is the retail price from this day. What do I know about this? I got shorts in here. And what do I know about this? If I got shorts in here, and this is the fair price, and I have about an 87% probability to take out this day's high or low, let me ask this very astute group of traders, which one do you think it would be? If I have buyers in here, might I get continuation buying? So that was yesterday's plan. Continuation buying and then selling, which was my plan for yesterday because I'm trying to get into the stops under here. So in the morning it was shorts, and if you guys followed the stream, you know that. And then later on it became longs, to take out the stats, come up here. And this was the primary target for yesterday. And then later in the session it was shorts. I narrated this in the Trader Lab. And it's not, I don't call trades. I take stops, you take stops, right? What's the big deal? Oh, you don't like taking stops? Then you can't be in business. This is called overhead and cost of production, not right, wrong. When you become a trader, you're going to learn this is not a business of being right and knowing and predicting. And that is our psychological orientation, to know. And why do we need to know? Because we have a psychological need for approval, to be right. And here's the other part: avoid pain. Now, pain comes psychologically, and it comes from loss. When you take a loss, you experience it as pain. Well, we are wired not to put our hand in the fire. Isn't that true? You ever burn your hand or do something where, the outcome wasn't good, drank too much, had a bad morning, any of those things. And then you go, well, maybe I shouldn't do this again, whatever it is. So that makes an imprint in your brain. So the next time that scenario comes up, you recall it. You recall the pain. If you take a stop, you're training yourself to avoid the stop, the pain. Okay, fine. Your mind cannot differentiate between putting your hand in the fire or taking a stop. It responds the same way. So psychologically, you're already behind the 8 ball because now you're going to look for confirmation to avoid the pain. Does this make sense? So what does it tell us? Well, what is this? Here's what this says. I got shorts. If I have shorts, where's my fuel? It's above here and it's in here. Now here's the possibilities for yesterday. It was, shorts, and then longs. There is a high probability of taking, about an 87% probability, past performance not indicative future results, take out yesterday's high or low. For me, it was yesterday's high. So I'm good. If I get through yesterday's high and come up, I can sell it because now I've gotten some of these guys out, and this was a target for the longs. And then, whatever it does, it does. And in the end of the day, it was shorts. And again, so now what does that tell us? What do we know? Let's come back to what we know. What we know is I got sell stops in these guys, and any buyers in here are going to be trapped. And now I have an 87% probability-ish, past performance not indicative results, taking out yesterday's high or low. Which one do you think? Let's start there. And this sets up today. So now let's go to our context grid sheet. And by the way, guys, if you're visiting in YouTube, is this taking too long? This is the trade plan. This is what starts before the market opens. And then, so what I know is now I've got my sellers built in here. Now, are we in a bull market? Are we in a bear market? Are we in a war? Do we have geopolitical uncertainty? What do we have? Here's the question for this astute group of traders. Do you want to own stocks? Or do you want to use counter rotations for liquidation and for short position? Now, I can't tell you the right thing because I don't know. But I can tell you I don't trade on fundamentals, but I do trade on what the market is. And what the market is participant behavior. If I get this tail out here and I close here back in the range, and I close under this retail price and under this retail price, what are the shoppers telling me? Remember, traders are shoppers. I'm not paying that. Get out of here. That's what they're saying. So, context. What are we doing? Now, let's go to Bookmap. And you're going to see how pieces fit together. This is called market mechanics. Now, the thing to understand about this, what I am discussing and sharing with you is time frame related. Now, what is this time frame thing? Here's what it is. This is a vertical integration of time frame as you think about it. But really what is going on, think of Matryoshka dolls, vertically. They're all the same. And that's what creates this. So the rotations are inside each other. That's why time in and of itself is not really the thing. Now, when you get into RTH and higher, now again, I don't use the clock, but I certainly look at the open, high-low close of the previous RTH. I look at the ETH. Those are time-based. But once I get outside of that, I'm not looking at the clock. So many of us I used to, like you, weekly, monthly, all of this, higher time frame. And it was regimented, and this is really a sidebar, but it was regimented by the clock, a calendar. Well, my perception over the years developed where I said, this is really has nothing to do with the clock, other than the open, high, low, close. It has to do with the behavior, not the clock. So I moved away from fixed ideas of time and into behavior. And when you get down to order flow, you'll see how the clock is not really material to this. It's the behavior. So early on, I moved away from that before I had order flow. And it was just observation and statistics. So let's keep going. So I'm opening, RTH open. Now let's look at the open. And let's look at what we're doing. Now, we are opening context grid sheet in range in value. What is value? This is the value area low, and this up somewhere out here. Hold on. Value area high. So the ETH high is under the value area high. The ETH low is under value area low. A key level from the higher time frame is around 70, 75. I got to bring you back. I'm overlaying all these pieces at the same time. Remember this key level. This is like an over-under for me. Because the buyers, what's this? The squeeze, who knows? If I come back outside, I'm back in the express lane and I'm going south somewhere. Not my job. So all this is telling me potentially you want to be on the short side. Now part of the thrill is from where, but there's more. So I'm opening in range, in value. Here's what it means, and this is my over-under-ish. It's an area. This area, very important. So if I open in range, in value, it means that we are in a fair area at the moment. That is then balance. Balance sets up a specific configuration in the Trader Lab. What are we anticipating? A two-sided trade. Then what? If I break out of the previous day's value area, what happens then? I trade in the direction of the breakout. Am I breaking out of the prior day's range? If yes, it's shorts only, subject to the plan. That's according to the context grid sheet. Now, so you understand, the context grid sheet is just an orientation piece to help you in your plan and your process to have an orientation to what you're going to do, not what the market will do in the short term. It's the overlay. Now, if I understand I'm opening at a fair price at a key location, and let's go back to the process, or at least the thinking. Is the market a bull market? I'm going to leave that to you to figure out. But how about this? Do I want to be a buyer or do I want to be a seller? And I'm not saying it's right. I have to be very specific. Everything I discuss is time frame oriented. Now, my time frame, my plan, And again, I really want to, the caveat is I'm not saying it's a good plan. I'm sure you can build better one. But my plan is I want to trade larger rotations because of risk reward. I believe in not taking big losses. My thing is relatively conservative stops, but give the trade enough room to breathe. So I use structure. I'm not using fixed, like it can't go over one tick over the high or swing of anything, because that's where retail traders put their stops. I don't join the retail traders. I trade against the retail traders because 95% of them lose, according to statistics. So what do? And what do I suggest traders in Trader Lab learn to do? To think like retail traders, but not act like them. Use what they understand about their own behavior and not do what their impulses dictate, but build statistical probabilities, because we're in an environment that is 100% random. So, is everybody tracking? So, if we know the market's opening in balance, let's look at some statistics. So we're opening basically, and where's settlement? I think pretty much in the same place. Let me just look. I got to find where settlement was. We opened a little bit higher inside of yesterday's range. So basically at a fair price. But let's look at what it means. Taking out the first hour's high or low, 98% probability. Taking out the ETH high or low, 97% probability. Testing the previous day's high or low, 82% probability. Testing the overnight volume point of control, which is the last auction in the retail price or high volume, about an 82% probability. Where are these things? Overnight volume point of control is here. 80% probability. Yesterday's high or low, yesterday's low. What was that probability? 82%. Why am I orientated to shorts? Because the market's long. Who's on the hook? The longs. What do I want to do? Get short. What's going to happen? No idea. Okay? No clue. But what do I know? Market's long. What do I want to do? I want to trap more longs. Could be me if I get long. But what's my plan for today? I posted it in Trader Lab. And this is not right wrong, by the way. I take stops, you take stops. What's a big deal? Get over it. Do I sound insensitive? You got to get over it. Why am I insensitive? You're going to be a trader, you got to make peace with the overhead and cost of production. The other thing you got to do if you're going to be a trader is understand this is a business of extracting edge, not being right. Think of this like sampling the market. You're taking samples. So the idea of trading is to sample locations where the trade might show up. Take your stop if you're out of alignment and then sample it again. So let's look. So this is the open, RTH open, who knows? I'm opening in balance and posted this in Trader Lab. Again, it doesn't matter what I post. Other traders in Trader Lab do absolutely the opposite of what I do. And they are profitable traders. So it's not one way or any one way, but it is a way to learn, and then you can adjust what you do to time frame. So my time frame is going to be different than yours, but my locations and the structured trades I share might be the same or similar at least. So, and every trader finds out what speaks to them, and we all take stops. So what is this? This is called variable high volume node. Now all I share in the stream are things I made up for myself many years ago, and I'm nobody. There's no holy grail, secret sauce, nothing. What it is you against yourself primarily. Anybody, in my opinion, who comes to Trader Lab can learn how to trade if they do the work. But being able to trade is really you. No educator can teach you about yourself or how to solve yourself. I can certainly let you know what I have done and what hasn't worked. which most of it hasn't worked as far as the psychology. It took me a long time to understand that willpower had nothing to do with it. You can have as much willpower, and next time I'm definitely not going to move my stop. I'm not going to bail out. I'm going to wait. And then what do? You do the thing you promised you wouldn't do. Do you understand the mechanisms that cause that to happen? That you really don't have control over certain aspects of your psychology, that they're primal and they have nothing to do with your intent, that this is what's caused the species to survive overall millennia, are the things you're pushing back against. That's what makes this so hard, because it's the randomness that is the hard part. It's not anything other than that. It's, where do I sell this? Do I sell this, Tom? Why not? Well, I'm in balance. If I'm opening in balance, I'm anticipating reversion trading. So if I'm opening inside of value, inside of range, not much has changed. But remember what I know. There's about 82%-ish probability to take out yesterday's high or low. I'm not looking for yesterday's high. And it can, of course. So I'm just saying I got to get short. Where am I going to get short? Let's see. So this is support. This is support. I call these variable high volume nodes. Let's look at the language of the market. What's going on here is retail price. If I move away, just remember what I showed you at the top of the stream, this becomes too low. If I hold it, it is a test of the fair price. What happens if this price is too low? Now the price gets raised. How do I know the price is going higher other than this? The volume. This is what the volume profile is about. Volume, when you go to your store and you shop, it's the same thing. There's a retail price or high, and that's where high volume is. If the retail price over here and over here is too low, it means that buyers and sellers are interacting here, and there's more acceptance at this moment here than there is there or there. So sequentially, I see my buyers. And of course, there they are, but I'm seeing my buyers. So when I see this, I have no short. I'm just sitting here and my teeth are chattering because I don't know where that short might show up. Part of the thrill. Is everybody with me? So let's watch. So I'm looking for shorts. Don't know. So here's what I have. I have resting liquidity here. Now I'm starting to use order flow. So what I'm using now is my perception. And by the way, I got to give you a statistic for this too. Forgot that. Roughly getting there is about a 68% probability. Getting to the overnight volume point of control, I don't know if I gave you that, is about an 80% probability wherever it went. There. About an 80%, and getting the value area low. So these are all important levels. These are my targets. So my shorts, wherever they might show up, and this is part of the thrill, is to come there, there, and out the bottom. That's my plan. Now, from where? Good luck with that. So let's watch. This is my first area to observe. And what I'm looking for is something called mean reversion. When you're anticipating and not predicting, anticipating behavior, then you're looking for locations to come back here. So with the idea of this is, look at this here. If I find a price that's too high, wherever it is, and this is part of the thrill of randomness, I'm going to come back here. So think of it this way. Too low, too low, too low, going to the moon. Up here, going to 1,000 or wherever it's going, 20,000, too high. What happened here? These buyers were absorbed, and you won't know until hindsight. So let's get over it. Where were my buyers? There, 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 there. No clue. Buyers are here. Sellers get below the buyers. This right here is reversion. I don't have a location though. I'm sitting out here in Twinkie land. So now this is too low. And now what do? I watch the behavior. Shorter time frame. I'm not paying that. Yeah, I'm willing to pay this. It's retail. Then what? Buyers again. So what do I know? Too low, too low, too low, too low, too high. If I find too low, I can come across what was too high. Now I'm into my liquidity. What is this? This is resistance. Why, Tom? Sellers, icebergs. Everybody with me? Now what? Absorption. No way to know. Let's look. Now I'm going to show you a trigger. Now I always say, and I always have to remind this because I know we have new visitors coming and going in the stream, and thanks for visiting us on YouTube in the Trader Lab today. And by the way, you all have an open invitation to Trader Lab. No cost for it. There's a link in the bottom of YouTube if you're inclined. The only prerequisite is that you're interested in building out a sustainable business. So it's not romper room. It's all business. Okay. We do have fun, but this is serious business. There's no time to waste. Absorption, break. My sellers are below my buyers. Now I'm going to show you microstructure. These are not actionable. Okay, I want you to understand, not actionable. You can learn to read. This is a language. I don't use indicators like you guys use indicators. I just do my thing, And my thing is order flow, the auction, and I'm using the profile as a chassis so I can read what's happening. Let's look at the micro. Now again, I'm just taking you down into the sub-basement of trading. Right here, this is what I know. I know this is here. I know this is here. Okay, what I don't know is, are they going to pull? Are they going to transact? Are we going to blow through them? See, these are the things we don't know. So I know I don't know. But right here, I see change. There's high volume. This is a microstructure. Now, I can't do anything when I see this because I just can't, human, right? I know right here, my sellers are here. And there's my micro. This is high volume that transacted right here. And you could see the delta down here. So I'm looking at the buyers. These are aggressors. And those are market orders. Now, market orders are aggressors, initiators, and stops. Okay, so we have two kinds of buyers in here. Initiators, going to the moon, Alice, and stops. If they're absorbed and I don't get buying above here, then I can come back here. That's what I know. Now, high volume in the microstructure is here. So, and how does this work? Watch. It can do, and I always think this is so crazy when I say this, it can go up or down. But the thing that's important is what happened here. Not that it can go up and down. It could do that anywhere. But it's what happened. So I now have a reference of maybe too high. So I know I have sellers here. I got buyers there. And right here, it's high volume and either bang, bang. If I break low, I now have a potential trigger, and I'm going to try to come back here. Because this is what? Balance, and what's the plan? Reversion, looking shorts only. So for me, I take a short, whatever it does, and there's my scale. So now let's talk again about a trigger. And I'm going to try to speed along here. I don't want to bore you. I'm just going to pull pieces out so you can kind of see what's going on. So when it breaks here, I can sell this against this volume. So let's look at this. Buyers are here, sellers are here. Going to the moon. Support. So look at it. Support, break high. This is where the sellers were. The volume is there. Support. Sellers are here. Buyers are here. Support. Break high. So too low, break high. So too low. Support, break high. Resistance. Support, break low. So what do I know? Right here. Support was there. I broke below it. What do I know? Support is here because I broke above it. What happens if I break below it? It's resistance. I can sell there, I can sell here, subject to my skill. I can be selling any of this, and my stop is going to go there. Not a recommendation. You could put it wherever you want. And then there. This is mean reversion. Then what do I know? Let's come back to what else I know. Where's my opening swing low? I think it's over here. What's under the opening swing low? Low. Sell stops from these buyers, sell stops from these guys. So I have longs, stops, stops. What do I know? Sell stops are here. If I sell here, where am I trying to go? Back here. If this is too low, I'm going to bounce off it and test this. If it's too high, I can come under it, take the stops out, and then where's my target, you're asking? There. Okay? And then yesterday's low, ETH low, and whatever. So let's watch this thing. So here's what would happen here. You take the short, you scale to here. Now you're risk neutral. Now what you're trying to do is you're trying to come down actually here and then lower. Okay, so first target would be out here. Oh, opening swing low here and then out here and then down. So that's what we're trying to do here, at least what I was trying to do. So risk neutral, and your stop could be, I put my stop here. Remember where I put my stop. I don't put it here. I could. Doesn't matter. Let's say I do. Doesn't matter. Watch. Notice where the support is. It's the variable high volume node. Why? It was too low. Now I have no clue. So you know what this thing is going to do. Once I put the trade on, I'm as interested in what happens as you, and I'm curious. Watch. So if this is too low and I come out here, no clue, I'll get taken out. I have no problem with that. This is the open. Now where's my other liquidity? It's here. So what happens here? I interact here. I get VPOC migration. And this is because it's balance. It is a bit, as we say, funky. Two-sided trade. So when I know I'm in balance, I anticipate two-sided trade. And balance is difficult because it's rotational trading. So if I know I'm in balance, I anticipate rotation, but I'm only talking about me again. I want to really stress what I talk about here in the stream is not necessarily a good idea. It's just what I do, and it works for me. But it's very specific. So there's a lot of traders, in Trader Lab, they're going to be taking longs, they're going to be flip-flopping around. And that's great because they have an edge. What I have found for me is my cognitive fuel in the tank will decline because of the concentration. So I want to take less trades, more range. I'll trade from what I perceive to be the primary side, and for me it's short today based on my plan and my read and interpretation of the market until it changes. So this is my next area. So I got sellers were here. Now let's use some common sense. Are you guys ready for common sense? Think like a retail trader. Don't act like one. Write it down. Think like a retail trader. Don't act like one. So what's here? Stops. C'est la guerre. Or c'est la vie, no la guerre. C'est la vie, that's life. What happens if it comes up here? Let's use our common sense. If the market here's how this thing works. Longs in balance, sell stops here. Hasta la vista. What about the shorts in here? Buy stops here. Balance is going to run over both sides until we leave balance. So if I'm trading reversion, which is what the context suggests, or balance, which is this, two sides, then you pick a side. I pick a side. I'm not saying you pick a side. I trade from what I perceive, very important, Pick what you perceive to be the side that has the edge overall, not necessarily this unless you're going to trade it. And you could be long, short, whatever. That doesn't work for me because I take stops, and I found that over time, because my risk is pretty constant, and depending on volatility, it could be 4 points, it could be more or less. I don't, I'm not rigid, and I suggest traders are not rigid. That you got to find through metrics based on the average true range, which is something you have to work on. If we have a lot of volatility or imbalance, you're going to get picked. The idea of balance is everybody gets thrown under the bus. So the outside edge is here, the outside edge is here. So I'm going to have stops for these guys, and I got stops for these guys. You see how it works? So when I push outside, this is called mean reversion. It's a specific trade plan in a plan. So if I perceive that the dominant side is the selling side, and I anticipate rotational balance, this stuff, then I'm only going to trade from one side. That's me. You, it's not important. It's whatever has edge. I have no opinion. The only opinion I have is that traders find their groove, use what I've shared and others have shared in the Trader Lab to help establish an understanding of how the market works. I got my sellers here. Here's my point about this. If I know I have sellers here, there they are, and this is in the book. What are these? Aren't these sellers also? And notice what's here. It's been in the book since, before the RTH opened. Is this material? What do you think? It is for me, and so is this. So as I come up, let's look at what I know. I got buy stops here. That you will know. If I have stops there and I have shorts here, I have fuel. So I'm using the concept of market mechanics and rotations in all time frames. That's why I'm only taking shorts, because in the higher time frame I've got longs. But in the short time frame I got shorts trapped. So then when I get the longs and the higher time frame is my short trade based on my plan, I'm only using the short squeezes, these guys, to take continuation shorts. Is this making some sense? This is kind of how you might think about this. As far as, well, what am I doing? Well, lots of days I ask myself, not so much what I'm doing, but what's the market doing? So I have a plan. And again, it's not good, bad, or indifferent. It's just a plan. And my plan for today is only short. Now, other traders take longs. And it's not right or wrong. Because their time frame, they can say, oh, the market's going up. Well, yeah, it's a rotation. It could do anything. So anyway, buy stops are here. That means I got buyers here and I got my sellers up here. And here's the key point. If I know there were sellers here and I know there's buy stops, what are buy stops? There they are. They're coming out right here. Now this is another little thing I don't talk about it much, but this is the stop and iceberg detector. Now, and I always get questions. Well, do I need the stop and iceberg detector? This is an answer that you have to determine. I want every edge I can get my hands on. And here's how I use one way to use this. Now, there's other things I do, but let's keep it simple. I know there's sellers here, and who takes the other side of liquidity? Do you know what stops are in market orders are? Liquidity. What is this? These are limit orders. This is the passive side in the order book. They need aggressors or buyers or stops, market orders, because you need the passive side, which are these guys, to fill the market orders. So if I got market orders because of buy stops from there, and I see what I call stop divergence. This is the only thing I use from indicator world. I mean, as you guys know, think of them, divergence. Well, if the market's going up, and I suspect because of this that it's buy stops, let's look at the buy stops. And I know the liquidity, which are the market orders, the buy stops, that the sellers need the buy stops or aggressors because they're limits. What do I see? I see the market going higher, and less buy stops. Maybe this is just a squeeze. Maybe I'm exhausting. Maybe these sellers are going to show up again. Maybe. And I got this. So right here, I've got location, and I'm trying to get short again for what? Market goes up to go down, goes down to go up, goes up to go down, goes down to go up, goes up to go down. These guys are all short, goes down to squeeze out the shorts. Now I got my longs. The more longs I get in here, the better it is for me. Watch. This is a trigger. I'm going to isolate it for you. Let me show you. Now, by the way, if I'm moving too slow, let me know and I'll get past all of this. But what I try to do in the stream is give you the rationale of how the market works so you can read it. This is language. The beauty of this process is I'm not using indicators and I'm actually here mentally. I'm going, what's going on here? Well, all right, I know I got sellers. I know I got my stops. I know I got support. There's my buyers. Here's my sellers. Going to the moon right here. Break low. Break low. Trigger. So subject to your skill set, you could sell this or watch. You could sell this. This is a structured trade right here. Let's look at it. Trigger or this. Subject to your skill. Buyers are here. Clueless sellers are here. What's happening? Break low. This is a micro trigger. The high volume. Let me show you this. I'm going to go back into micro. I just want to show you Matryoshka dolls. A vertical integration of time. Watch. So what does this tell me? Too high? No clue. Buyers. Inside of this is high volume. This is like an over-under. So if I'm stalking a trade, and this is not a recommendation, this is where the fair price is in this little auction. Buyers are here, sellers are here. You can see them, right? And it's like, fair. So here's the possibilities. You're going to love this, up or down. Well, but I got this. I got my stop divergence. I picked my buy stops off here. And I got longs. Is everybody with me? I want you to see the logic. Kiloton. What do you think? So, retail price. What's it doing, Tom? I don't know. What do you want to do? Get short. Is this the right place? Clueless. Okay. Are you willing to take a stop? Before I put the trade on, I already took the stop mentally. Trigger. So what you're seeing this is, it's on sale. I'm not paying that. Retail. What happens if this price in this auction, this microstructure right there, is too high? I'm going to get in the car and I'm going back to the supermarket. So basically, I can sell this and I scale here. This is a higher time frame. And then I got my stops under here and I got my statistics. Okay? Is everybody with me? This is very painful, I understand. And here's another short. So I got this, and a sweep, and it puts me back to there, out the bottom is what we're trying to do here anyway. So this, and this is always interesting. So what I know is I've got this, I've got this. I pick, I can sell it. If I sell it up here, bang. Hold on. Let me make sure I got the right thing going here. Yeah. So I can sell this. I'm trying to come out. I get risk neutral, and if I don't break low, my stops Trailing, depending how you manage your trade is up to you. If I come out up here, I get taken out. I know I'm in balance. I'm not concerned about it. I'm annoyed. Because you know why. Now this is an outside edge in an intermediate time frame. So let's just see what happens here. So now I'm above these guys. Where's my next level? It's going to be up here. Sweep. I'm now looking for a counter rotation. I don't get it. Once I get above here, I've got to wait, break low, absorption, icebergs. Let's watch. Let's look. Where's my volume here? If I'm taking any shorts in here, I've got to be above here. I can't be here. No good. And I take stops, so let's get over it, okay? So if I don't do anything and I get a trigger here, my stop's got to go here. So wherever I get in, my stop is here. So I'm just selling it. You know, other traders are buying it, and it's no problem. This is a structured trade in the Trader Lab right here. This is VPOC migration rejection test short, and you're still coming down, or trying to at least come down, okay? So your next target is this. Anyway, those are the trades I was doing, and I was posting some of these in Trader Lab. And this, okay? Next targets. And what was it? About an 80% probability to go here, and you have value area low. Okay? Next trade. Now at this point, watch. At this point, so this is the next target. So this trade, for me, this is where I'm trying to go. This is it. This trade now is over, or let me give you the or. Now, if you're running, and I always talk about for developing traders to start with a minimum 2-lot configuration. The idea is that you build statistical probabilities, and you need to do that with a 2-lot. Why? The job of the first trade is to attempt to buy the stop on your runner, and then because it's a psychological thing. Once you're risk neutral, it's going to give you better control over the lunatic, who is risk adverse, wants, all that, right? When you calm yourself, then you can better manage, what your intention is. So for me, my intention is there. That's me. That's my trade. I put an order out in front of it, and either I get stopped out or whatever it does, it does. That's just randomness. Now here, when this happened, I saw this, and I went, oh, that's different. Let's look at the change. And again, I'm going for yesterday's low and out the bottom, and whatever it does, it does, because that's my plan. So notice, other than this stuff, that the direction, the rotations, counter rotation, the rotations are the downside, okay? Look at here. So rotations to the downside, interacts with liquidity, target. You notice where the liquidity is? This is another thing. I have 82% probability to go here, and I have liquidity hanging out in the book. This is another reason to get your order out and put it in front. Up to you. Again, not a recommendation. You do your thing. This is a change. When I see this, I'm going, uh-oh. Now, what do I do with uh-oh? What do I do? Well, I don't really know when this happens. When I first saw this, I said, well, there must be news. There must be something, because this is just not another, walk in the park. This is change. So when I saw the change, at that point, this right here. So if I was trailing a runner, it'd be out above here or above this volume here. It could be any way you might. And let me show you a trade management idea, not a recommendation. A couple ways you can do this. Going to zero, right? What do I know? This. So let's look at this. This is order flow. So I'm using, here's what I know. I got buyers here, There's the iceberg. This is support. Uh, Break below, it becomes resistance. Now what? Watch. Just watch. And this is just an idea. This is nothing more. I don't know. What's right for you? I have no clue. I don't know what's right for me sometimes, except my plan. So I go, I don't know. You'll always hear me go, I don't know. And it is not just, it's the truth, because it's random, so I don't know the outcome. I do know the language. I know my buyers got run over here, and I know if I come back and check it, it's resistance. I'm using that order flow as resistance. I know I've got buyers here, so there's absorption. So the sellers were absorbed here. There's the iceberg. And I know that the buyers it's being sold here. So sellers are there, buyers are there, high volume is here. This is your retail price. Remember what I did up here. This is, where it was, your retail price. Same thing here, opposite side, retail price, resistance. What do I need? Good question. What does it do? It either is going to break high, and this is retail. So I have support, resistance. So right here I know it's important. If I can break low, I keep going. If I can't get below here and I come across here, I can now squeeze. Why? I got my shorts in here. You see? So I'm always thinking from both sides. I got my shorts here. This, no clue. I got my shorts here. If I get this, as far as I'm concerned, it's going to zero until it doesn't. Watch. See the behavior. Resistance, high volume, chop, chop, sellers here, buyers here, high volume here, break low. It can do either. If this is too high, this is like my VPOC. It's the same as this, opposite side. Too high, I leave it. Now I run into another more liquidity. Let's watch. So from a trade management point of view, and you have to vet this, up to you. If I'm below here, resistance. I'm below here, resistance. So you see all the resistance. So far, going to zero. No idea. This is important. Overnight volume point of control. This is last time we were down here in the ETH, this was the retail price. Is it too low? What do you think? Well, if I don't get below it, then what? It might become too low, and then I can do what? Revert back to what's retail. So multiple time frames. Let's just see what it does. Right here, I break above here. Notice it holds it. This trade is, as they say, hasta vista. Thanks for playing, Tom. You get a coupon to the buffet. Notice the high volume down here. So I have volume there, and I got volume here. Now, I don't know anything. It's like resistance. What's this? Break low, right, Tom? No, break high. Trouble. What about this one? Resistance, trouble, out, or your trade plan. Are you guys with me? How are we doing in YouTube? Are you guys following? So now this is the change. Now I see the change and my jaw falls on my desk. And now right here, this is what I know. Support. Why? Resistance, old saying, becomes support. Now, other traders in Trader Lab are going to use this for a long, and that's great. I don't. I go, what's happening? Because I'm still looking at the statistical probabilities of taking out yesterday's low. What is that? Yesterday's high or low, 82%. Which one do you think? Now, it's a good guess. It could be yesterday's high. It could be both. We could take out yesterday's low, yesterday's high. I don't know. But I suspect yesterday's high was just a short squeeze and that the rotations to the upside are just squeezes until it changes. And again, I'm not in the prediction business. What business are we in? We're in the alignment business. So this is the warning Will Robinson moment for the potential to come and wreck these guys. And who knows? Let's see. See? Now this, no clue. This thing is like, what? Let me show you. Now, some of what I'm going to show you is not, these are not necessarily trades that would work for you unless you have them vetted. So I see this. Actually, this is where I start. This is where I was looking for the short here. So let me show it to you. Now this, I'm showing you what I do, and these are not recommendations that you do anything. I'm just showing you ideas. Then you pull out specific trades, and there's just to remind you, there's 60 PDFs of these ideas that I'm sharing, some of them that I'm sharing with you, and they're available to all of you in TraderLab. And these are, I'm not a there's no trading course. I'm a full-time trader, so I don't have time for that. But I do give an hour and a half, and I share ideas. Other traders are asking me, what are you doing? So when I'm not asking myself what I'm doing, I'm sharing what I do. And basically, what I'm doing here is I'm showing you actual trades, and I'm showing you screenshots, and there's no plug and play. If you come to TraderLab and you do try plug and play, you're not going to succeed because you've done that already elsewhere, and how's that working out for you? What you need to understand is learn that this is a language, and that the rotations in and of themselves are random. So we have to remove this idea of what it is going to do. It's where might it do it, what are the things that suggest. Now I have over 90% probability taking out yesterday's higher low. I'm looking at this thing and I'm going, huh, and this is basically what's going on in my brain. I'm going, wow, maybe we're going to take this one out. Well, yeah, but look what I got laying out here. Liquidity. So coming up, let's look. Liquidity here. Sweep. This suggests a counter rotation right here. So if I'm looking for shorts, which is what I'm looking for, I'm trading balance or mean reversion. Now my teeth chatter with the rest of us. Let's get over it. That's because uncertainty, fear. I don't want to take a loss. Pain. I don't want to put my hand in the fire. Pain. Avoid pain. How do I avoid pain? Certainty. Great. Where's certainty? Is it there? Where's certainty? It doesn't exist, so I can't get it. So when I look for certainty, I'm looking to avoid pain and risk. Isn't this true? If I'm looking to avoid pain and risk, I'm taking more risk in a random environment. If I get short here or here, was it any better getting short there? I mean, did I accomplish anything different in a 100% random environment? No. What did I do? I responded to my fear and I increased my risk. If I take this trade here, let me show you. And I have no clue. Remember, I'm the clueless, but I'm not ignorant. What do I know right here? All I can know, let me show you the micro. Now, I don't know. Right there is my micro high volume, right? I'm just trying to open this up so you can see it. Right here is where the sellers are. There's the icebergs. And there's the sweep. The sweep is what they call a sweetener. This helps me with my trigger. So if I break here with the sweep, I break here, I can sell this, I can sell this. But guess where my stop has to go? Out here. Now, if that's too high for you, then there's no trade if it doesn't fit your risk reward. There's other ways to do this. Let's watch. I'm just telling you what I do. And I'm about as thrilled as you are if I take a stop. I come above here. So what is this? Support. What do I think emotionally? Oh, you're going to get stopped out. Why didn't you wait? What? Does this sound familiar? What's that voice in your head? It's the lunatic. It's Hyde. Jekyll and Hyde. Everything's 100% clear in hindsight, and you're going to be judged and criticized. That voice in your head, do you hear the voice in your head? That's Hyde, the lunatic. And Hyde is great in hindsight. You shoulda. I knew it was going to go higher. I should have stayed long for here if it goes there. But then it doesn't go there. Then you forget all about that. Anyway, for me, reversion and stops and whatever else happens. Watch. Sweep again. This is support. This is resistance. What's happening? High volume. So what you're seeing me do here is I'm trying alignment. So this is a short and the stop. This is where it fails. Or, let me give you the or. I put my stop here, and if I get short here or here, I take a stop. Fine. Sweep, high volume. So I'm still looking at this. So this is my over-under. Remember how this might work. The same way it worked here. If it's too high, I break down, it's resistance. If I break over it, it becomes support. If I come up, going to wherever. If I break down the volume again, it becomes resistance. And I'm in the area for short. Where are you trying to go? Here. There. This is your scale. Okay? Back to the mean. It's called mean reversion. Heavy on the mean. What's hard about mean reversion is where's the outside edge. And I always, say in TraderLab, the mean reversion, what I've had to do rationally for myself with this, I mean, it's mental games maybe, is if, let's just say, theoretically, I took a short here and I take a stop. When it comes out here, is that bad for me? No, it's actually improving the trade because the further outside I come, the more range I'm going to get. So if I take the stop, other than my emotional response, which you know how we all feel about that emotionally, I'm going, well, that's not the, you say whatever you say and however you release your tension. Ever pound the desk or hit the desk? I do sometimes, it's like, that's an outlet. That's all it is. Then on again, back to here. So this is what reversion trading is. So this is the primary condition of the market, rotations. So scale. Then the stop stays here or trade management. Now let's look what we know at the moment. And this, remember, this is all in real time, so it's always changing. This too high, outside edge. So this becomes resistance. If I come over here, so this in here, I rejected that. So now I have this. This is coming from here. Let's go down in time frame as you think of it. Now remember, no time, order flow. So what I know is I found too high, maybe, break low, rejected this. Now what? Where was, here, watch. Sellers are here. When I break high, this becomes support. This. In here. So, support, resistance, support, resistance. Here's how you might look at this. Buyers are here, buyers are here, the volume is here, break high. How do these high volume nodes work? Resistance, support, high volume. Resistance, break high. Sorry, Charlie. High volume, break low. Resistance. Where's support? Where it was, too low. It's there. If I sell this, I can scale here or here, higher time frame. If this becomes too low, I can come back here. If this becomes too high, I can come back there. Break low, I can sell that. And again, I'm getting a little more advanced on you, don't mean to do that. But all I'm doing is looking at structure. This is the auction. It speaks. This is language. Now you're going to go, I don't know. And I'm going to go, yeah, I understand. Because there's slop. But what I know is the language. What's the language of the auction? What's too high? What's too low? What's fair? And as we go down in time frame, it's the same process. So this being too high and this being too high is the same as that. So in shorter time frames, I'm auctioning, I'm leaving too high, I'm checking what was too low. If I get below it, it's now too high. If I leave this, I'm coming back to what was, what? Too low. And if I get, and notice how I bounce off it. So this is how the auction works. And if I bounce off it, what do I have? Let's see. Structure. Let's just see. Too high. Are you guys with me? So what do we got here? Well, subject to short, short, resistance, short. You see it? So subject to short to there, or short to there, break, short to there, retrace, short to there. All these are structured trades if this is your thing, you know. This is my thing. And it's called mean, underline the term mean reversion. Where's my resistance? What do you think? I don't know. So in TraderLab, what do you have? Short, 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 and then whatever, right? And then if we get under here, where are we trying to go, Tom? What was that plan? ETH low, yesterday's low, and then I don't even know because I haven't seen it. There's the current low of the day, and we have a target out here, this actually. And let me show you this. And again, no way to know, so let's get over it, okay? Remember, this is a business. Yeah, this 42 and change, this is the target out here, by the way. So this area, and it's this, okay? So there's no precision. Now, I think I'm kind of current, maybe not. Let's go look at some more. You guys have questions. Now, this is TraderLab. This is basically the business of trading, learning how to trade, building a plan, and not getting, and let's get over it, all right? There's none of this. Be right. I knew. Predict. Nada. Doesn't work that way. Let's watch. Where are we? At 9:30 Central Time, this is the double bottom. I remember we were thinking about this. We talked about this in TraderLab. This is a weak low. This is an exhaustive low. Double bottoms, double tops, and all that are weak. Okay, so if I know there's a double bottom, I'm going to go for this. Now, because it's two-side. Now, there's another piece here I want you to know about. So I'm looking at this. This is on the hip parade. So I'm still looking for what? Yesterday's low. Now, you always must manage your trade. So we didn't get here. Yesterday's low and the ETH low is here. We didn't get there. So where's resistance? There. This. There. 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 So these are resistance, okay? All this, you can use this any way you want. That's resistance. What's this? Break under it, going to zero. Break above it, what's happening? Here, resistance. Subject to your trade management. You could be out here because it broke this, or you're all the way back here and it breaks that. And this is how you deal with giving back 10 points. Me, I'm not too euphoric about that. But if I come up here, liquidity, break, trigger, or no trade. Now, the other thing you have to be extremely aware of is we failed to get to yesterday's low and the ETH low. What do we know? Let's come back to the way the market works. Market mechanics. We know we've got the sellers in this leg. So if I come across, then I know I can squeeze. So there's a few possibilities. I know this is important right here. If I sell anything here for a continuation trade, I've got to get below where the buyers were, which is here. So if you look, let me take you back. I'm just showing you again structure. And I don't know what it's going to do. So that part is not in, it's not part of it because I can't. Wait a minute. Well, something's a little weird. Okay. So looking at this, I have my volume here, and I got my next layer of volume here. So think of this like as we're coming down, it's like, I'm not paying that. Yeah, but it's on sale, this consolidation. And there's volume in here, right here. If I break away, it's resistance. You could see it there. See, watch where we're lined up. So I can read this and go, well, that's a store. It's like your mini mart. And if it's too high, I'm going to leave it. All right, go down to the next mini mart. What about this one? I break away. It's too high. Break away. So I got resistance. Come down to the next one. Chop, chop, chop. Sellers, buyers. Break low. Resistance. Mini mart. Break low. What about here? Well, the buyers are here. The liquidity is here. I get below it. I have a sweep, which is warning Will Robinson moment. This is resistance and this is resistance. If I don't get above it, I go lower. As I'm going down, now I have this and going lower, and I have this. If I come across, this is the teeth chattering moment, and then I know I have this, which is out of here. That was too high. So I got this as resistance and I got this. If I come across here or even here, it's up to you, subject to, and I have my sweeps. Remember, my sweeps here are telling me there's trouble for a counter rotation. That's what these sweeps do. It's really a cool tool. I'm a big fan. And it's not predictive. Remember, guys, all it says is that a condition exists where we might at some point see a counter rotation. There it is. So you get taken out. And then I'd be looking to put it, looking to put it back out again. Which would be this, and then wherever it goes, it goes. Now, this is the fair price. So it's always outside in for me. So other traders in Trader Lab were getting long, I think. I don't remember anymore. But this is the IB. So this is the first hour's low. Remember the statistic. To take out the first hour's high or low is about a 98% probability. Now, it could take out either one. It could take out both. It could do whatever it wants to do. It's not up to us. My plan is sell. So I now have what I perceive to be a double bottom and a weak low. If I have a weak low and an IB stat at 98%, and I have an 82%-ish probability open here, and the ETH higher low 98% or 92%, everything is telling me to stay short and get out, don't get long, use the counter rotations for continuation shorts. That's my thing. So look where I come. So what am I doing? I'm squeezing both sides. So how do you do that? What do you do? Well, you can trade both sides if that's your thing. It's not my thing. I always suggest to developing traders work what you perceive to be a dominant side until it changes. Are the longs the dominant side or is it the shorts? Now here's the other piece. Notwithstanding the higher time frame, which I went over at the top of the stream, everything for me is get short and that's it. Not saying it's right, but if it changes, then I get long or I have no trades. You see, it doesn't matter. So let's look. What do we know? I know I've got my sellers here. There's my liquidity. I have my this volume point of control, the retail price in the daily developing time frame. I know I've got my sellers up here. There they are. There they are. There they are. There they are. And I know I got stops here, right? So if I come up into this area, I want to sell it. Stops are here, right? Liquidity is here, right? Now, there's a little more just to keep you going. This is an outside edge. You notice how the volume tapers off here? Let me show you. What you're seeing me do, I'm in multiple time frames, but there's no clock. Here's what's happening. Let me show you micro. You know how this works, right? I'm not paying that. Yeah, it's on sale. And then there's a retail price for wherever this volume is. I'm just giving you an example. If I find too high, I'm going to come back to the retail price and either hang out and either this is going to be too low and I'm going to go north, or I'm going to break under it and it's going to become too high. I'm going to go south. Everybody with me so far? Give me a yes or no. Okay, and YouTube, I can't wait for your response. I'm going to say, I hope you guys are with me. Now, let's go to a higher time frame as you think of it. Where's my outside edge? Over here. It's out here. So if this is the retail price, where's too high? This is what mean reversion is. When I'm in the microstructure, this is too high, too low. In the developing daily time frame, going up in time frame, this is too high and this is too low. So what you're seeing over here and down here is the same thing that's happening right there. I hope I made the point. Apologies if I'm taking too long, but I want to be sure you see that we're doing the same process in multiple or a vertical integration of Microstructure dolls or a vertical integration of time. No time though, behavior. So liquidity, high volume, up, down, clueless, and what else do I know? Where's my fair price? This is the fair price. So if I come outside and I find too high, I can come back here. That's what I know. But I'm still trying to get my statistical probabilities here. So let's continue. Where do I go? Where's my stops? Here. So resistance, something's a little off here. I'm not showing the volume up here that I want to show you, but volume is in here, liquidity is here, and this is resistance up here. So when you're crossing across this thing, this is the volume point of control. Remember what this is. Oh, it's on sale. I'm not paying that. You see, this is what creates rotational trading. So when it comes across, I'm already looking for shorts. Now the thing is, I got to have a location. Sweep. Remember what set off the longs? The sweep on the other side. So if I'm coming up and I see the sweep, I've got my buyers here, and as far I don't know where. Remember, I don't know. Outside. This is what's hard about reversion. Buyers are there. Now, buyers are here, but I don't have a trade here. Buyers are here. I'm sorry. Yeah, buyers are here. Break low. Too high. No trade though. No location. Outside, my resistance is all the way out here. Liquidity comes in, and I have this. All this is material. When I break under here, this is a short, this is a short, and I'm trying to come to here, but since I know I'm in balance, and don't forget I got a double bottom, remember, and I have a 98% probability of the first hour's high or low. I have about an 80% probability of yesterday's low, 98% probability of ETH low. All of this puts me on the shorts only. And that's where I'm going, Now, let's look. I haven't seen any of this, but we're almost caught up. Where's my resistance now? Support becomes resistance. See it? Support becomes resistance. So I got resistance, resistance, liquidity. These are order flow triggers. You could be selling this and you're going for this because my buyers were here. And if I break below it, now this becomes resistance. This is also a short, it's up to you. I'm not saying anybody should take these. If you vet them, you can figure them out. Yeah, you could sell this. Let me show it to you. Now, you have to understand, you'll do some of these, you're going to take stops, right? So let's assume you take this one. You come up, boom, and this here, when it's above it, is not, there's nothing to do here. It's got to get under it. So, if you might get short in here, your stops are going to have to be up here. If it breaks here, you're selling this, your stop is here, and then you're going for that. Or depends where the low is. I think we already took it out, right? So, yeah, we did. That was it. Okay. So this is your resistance. This, no clue, break here, short, wherever you go, you go. Come back here, sweep. What do we know about sweeps? By the way, let's look at the sweeps for a second. The sweep here suggests a counter rotation. When I see the sweep, I'm already mentally here. Notice what happened with the sweep here. Up. I get a sweep here. What am I anticipating? Up. I break low. Resistance, sweep. What am I anticipating? Up. Resistance. What can I do here? If I sell it, I need a trigger. Now let's look. Right here, I have my micro high volume, right? Chop, chop, chop. Buyers are here. Sellers are here. How does my trigger work? Break low, return, continuation. What does it do? Break high. What does that say? Tom? Nada. Support. See it? Up, here, sweep. What does the sweep say? Potential for counter rotation. Now I'm looking for the short. Where is my issue that I have to deal with? This, I don't have a trigger. I don't have a trigger. What am I doing here? Here. I can sell this. And if I sell this, my stop's got to go out here. And if I take a stop, fine. I put it back on again here. Doesn't matter. I take stops, you take stops, right? Is everybody following? Resistance. Where's it coming from? Here. What happened here? I got my icebergs. I got my buy stops. Thanks for playing. They get a coupon to the buffet. Notice what's here. Limit orders. The order flow. And the icebergs. All these are shorts and they're continuation trades, and then you manage them, and whatever it does, part of the thrill. Here's another sweep. What do I know? By the way, this sweep, down. That sweep, up. This sweep, down. This sweep, up. See it? Now, it doesn't say, it just says, wake up and smell the coffee. Okay? And if you got short again, now here's another little thing. If I know there's stops over here and over here, when I come back again, I know I have more risk because now I have, well, how does this work? I've got sellers in here, I've got sellers in there, and that means I got buyers here because the sellers become the buyers. By the way, I see I'm just about out of time. Please give a like if you're visiting in YouTube. Thanks so much for visiting Trader Lab. Remember, there's a link in the bottom of YouTube. You can download 60 PDFs of these structured trades, and they're not plug and play. You have to vet them. If you're interested in Trader Lab, use that link. There's no cost for it. There's a library of webinars and the Trader Lab community. Data mining, mutual support, psychological processes. This is the process. You can learn this in Trader Lab and tons more. Don't forget to leave the like. Appreciate you guys visiting with me, sharing some of your valuable time. Hope you get something out of this and that together we can build a sustainable business and maybe create a career path for you. And you might be able to get that in the Trader Lab. Thanks again, guys. Look forward to seeing you tomorrow. And if you're just gambling, you might want to come to Trader Lab and see what you can do to change your outcome if you're not consistent. Everybody has random winners. That's not the answer. It's actually part of the problem. Randomness generates, I'm on the right path. I just have to make it better. The question for you is your process defective? We all have random winners, but if we don't have edge, in spite of the random winners, we're still going to go out of business. That's where you need to come to Trader Lab to determine if you're actually trying to fix a defective process. And that's called Trader Groundhog Day. Keep waking up in the same place in spite of your effort. It may not be you. It might just be your process. Please give a like on the way out. Thanks again for visiting Trader Lab. Look forward to seeing you guys real soon. And those of you in Trader Lab, thanks so much for being part of the community. I think it's one of the best trading communities out there, and it's you that make it what it is. Thanks again, guys. See you soon.